2022, an AI finance associate agent for private markets. At Stanford, Muhammad's research focused on leveraging AI to reduce market frictions. Prior to Stanford, Muhammad was consulting at McKinsey in New York, managing AI transformations for PE funds. He holds a PhD for EECS and is a former Microsoft engineer at a previous startup. Thank you for honoring the fireside chat, Muhammad, and I'll let you take it.
Thank you. Thanks, Vinod, so much for accepting our invitation to be here. It's a great pleasure to have you. The main angle of this talk series that we have is AI and investment. Just trying to shed light on how AI is changing the entire landscape of investment across asset classes, starting from early stage VC all the way to late stage. And the reason that we really like to have you and ask for your inputs on this topic here is twofold. Number one, just because we are at the core of innovation and AI, and especially how VCs are investing in AI and how AI as an investment asset and investment vehicle is shaping this industry. But also I know that you are very much into AI changing the workflow of investment for private equities, Wall Street, latest stage, and that's showed itself through the investments you have made in multiple startups who are basically going after AI for Wall Street. So the mix of these things is what really makes us excited to have this talk with you. And the other thing that I'd like to share with everyone, as a PhD engineer, I personally follow Vinod as a visionary investor in VC, because I know that you are connected to the root engineering of the innovation and you are not shy away from reading the papers, which as a PhD I always enjoy. Now, before we start, Vinod, I'd like to go through some of the codes that we have seen you recently say in the interviews you have had, just to set the floor and set the context for everyone, and then go through multiple questions that we have prepared for you. Hopefully we get enough time to go through all of them. You have said that I have probably failed more often than anyone else in Silicon Valley. Those don't matter, you remember the big success. In the 40 years that I have been doing innovation, I have not seen a single example of big change happening by big companies, institutions, or field experts. 95% of VCs add zero value. I would bet that 70 to 80% add negative value to a startup in their advising.
VCs don't like me very much for saying that. But it is true.
We will go through it. We had bet on OpenAI some years ago when everyone was calling it a silly investment. There is not a single example where I have used IRR, internal rate of return, as calculation to decide whether I invest or not at Khosla Venture and startups. And in your recent paper, AI Dystopia or Utopia, which is available in the Khosla Ventures website, you argue that the future of AI is not about the job loss and surveillance and existential risks, rather about abundance of an AI amplifying the brain power and creating the post-scarcity society for humanity for the first time. And you think that in the near future, humans will be free from service and we will have massive productivity and optional for work that is driven by passion, not necessity. And the last quote I wanted to mention is that you have said, I am a techno-optimist with care and empathy. And we will have the future of abundance, which will free humans from servitude to be more purposeful. With that said, Vinod, I would like to see how you see the first question at the macro level. How you see the AI, the dynamics of that will lead us to the utopia versus the dystopia. What are the dynamics? What is the determining factor? Who is writing this? Who is deciding about this?
AI is fundamentally a tool for great productivity improvement. In 2016, I wrote, I think it was in Fortune magazine, I should double check, AI will cause great abundance, great GDP growth, great productivity growth, all the things that economists care about, and increasing income disparity. So I still believe that. That was almost 10 years ago. And why do I believe that? Because AI will essentially make all expertise on the planet free. So those of you who are experts, your expertise, you're competing against near free. And honestly, even by 2030, next 5 years, relatively near term, I can't imagine a human being able to do a job. There may be a few exceptions, but generally, that AI won't do better than any human. And to be clear, I'm talking about the capability of AI to do this. Whether we as humans let it or do that or adapt it, that's a deployment question that will vary from company to company, and it'll vary from country to country pretty dramatically.
And having said that, you have this tweet, this view that if we look from 2040 back to what happens in 2020s, COVID and the Ukraine war, both of them are actually good dynamics for innovation, and they fast forward this process. Can you elaborate on that, and how do you see that changing?
As sad as Ukraine is, it's very clear Ukraine started a transition of the energy economy and energy transition that is, I think, quite irreversible at this point. I'm generally pretty optimistic about that. If you look at what COVID did, other than being horrible in, I think it caused some 7 million deaths or something, but what it did is convince the world we shouldn't be subject to decisions by President Xi or whoever's then in charge of Chinese policy. Once he shut down activity in China with quarantines, you couldn't buy a refrigerator in the US for a year. I think what that started is a transition in every boardroom in America and elsewhere in the world. Do we want to be subject to the policies? And those policies weren't done for bad reasons. He was trying to protect his people. But even if they were good people, it made the world dependent on their policies. And I think almost certainly what started as a supply chain transition to make sure manufacturing for almost everything can be done outside of China is now catching even more steam. Now, why is that important? The only way to make that transition is with technology, not with, there's no cheap labor in the US. And so technology becomes the only solution to solve that problem. So.
And as we move forward, how do you see the role of politics and regulation for forming the innovation landscape and leading us toward the utopia of AI that you described?
Well, it'll be highly variable depending upon the country, probably also the company, but the company level is easier. I like to say, once a bunch of studios signed up for the Screen Actors Guild after the Screen Actors Guild strike recently, about a year ago or so, it almost ensured those studios will go out of business. Because what's very clear is people who don't adapt AI will be killed first by the people who do, in every industry. And no matter what the Screen Actors Guild does, it was a very short-sighted move. They ensured their customers and clients go out of business. Because others who didn't sign up to that agreement are not constrained to generate content with AI. So that'll happen in every industry. Now, some countries, based on their politics, will be slower, will try and slow down. What is the bad thing? Job losses. Mm-hmm. But they will lose to countries that don't slow down. And so this will be a policy decision in each country, a combination of policy and politics. I think that's what will happen.
So you're arguing that you should not be worried much about the job loss, rather let AI take over and let the labor force to reskill.
I'm not saying we should be worried. I'm saying we don't have a choice. Especially if some countries in the world adapt it and others don't. Mm. The cost of production will be at such a disadvantage for countries that don't. You lose those industries.
So what do you think as a regulator or the politics, you can do to make this transition easier, smoother?
So I think that's the key. You have to make it, so, it's fun, especially in a forum like this, to talk about disruption. It's not a lot of fun if you're the person being disrupted. And so we have to understand that that happens and there will be resistance. That the coal industry is still fighting climate change because they're being disrupted. We know that. We know the legacy industry, the oil industry, the coal industry, and energy will fight to their death now unless things are done to take care of their interests also. Probably too long a topic to go into today. But these changes will be driven anyway by somebody. So I think we as policy makers and politics makers will have to make sure the people who are disrupted get taken care of. So I always say techno-optimism is great if you have both care and caring. And caring is for the people who get disrupted. Care, there's a bunch of security and other safety issues that we have to care about.
Can you elaborate how you think we can take care of them? Like, is it through education programs, getting them up to speed, or?
Education is largely irrelevant because the AI will be smarter than humans in everything. So why do you need education for humans? It depends on the time frame you're looking for. Education won't matter. Expertise won't matter. Bad news for all the PhDs in here. Almost certainly there'll be an AI in the next 2 or 3 years that knows more about your area and every other area than you do. And it doesn't matter whether the PhD is in chemistry or material science or biology or in economics. It doesn't matter. Sorry, it's a grim sort of picture, but especially to an audience at Stanford University. But the economist's answer of more education, more training is largely irrelevant when there's nothing to train for or educate for.
Mm-hmm. And what do you think is the answer?
Well, the answer is social policy. If in fact this abundance happens, we will have dramatically increased production of goods and services. Even though GDP measures as we measure them today will probably be wrong. Any economists here?
I did do all the economics.
Okay, good. But modular that, the total production of goods and services will go through the roof. Why? Because labor will essentially be free through robotics, and we can come back and talk about it. Expertise will be free. Scientists will be free, so the rate of innovation will go through the roof. It's hard to imagine in the economic sense what roles humans have to play. And I know it sounds incredulous today, but I'm almost certain none of you will be debating this in 2030. So how do we take care of people? Do we care about their income or the total production? There's two parts of a society. Production of goods and services, which is what economists like increasing GDP, but the other is distribution. Let me give you a few examples. Almost certainly in the next year, 2 or 3, every student in this country, definitely in high school, but even college, could get a free personal tutor to tutor them on any subject. And I mean free by $1 or $2 a month. And that's already happening. My wife runs a nonprofit. We probably support 5 million students a month. It doesn't cost that much. And I hope that gets to 500 million students that get free personal tutors. You can do the same with not only primary care doctors, but specialists, all essentially free. I think that's within a couple of years, modular regulatory. The FDA doesn't let you give medical advice if you're not part of the AMA, which is a doctors cartel or union, the American Medical Association, and they will fight it. Look, the AMA doesn't, and this is the kind of resistance and slowdowns we will see in the adoption of AI. The AMA does not let a nurse with 4 years of medical training prescribe a Z-Pak, except in 9 states, I think, in the country. They won't let you because it reduces the doctor's visit and they don't get paid. It's that simple. So incentives matter. Doctors generally opposed to the use of AI, even though it is absolutely clear, even without fine-tuning, AI is better than doctors in most times these decisions matter. There was a recent study out of Stanford Medical School, Arnie Milstein, who's probably the foremost expert in medical care quality in the US. And he did a multi-center formal study of AI versus humans. Humans for complex diagnostic reasoning, which is where the diagnostics actually matter. If you have the flu, it doesn't matter if you get the diagnosis wrong, or if you have a UTI and you get the diagnostic wrong. Those things self-resolve anyway, even if you made a mistake. But for complex diagnostic reasoning, human accuracy, at these medical centers, which are probably the best, highest level of care in the country, and that in Fresno at the community health center will be much worse. The accuracy was 73%. So 27% of the people, when it mattered, got the wrong diagnosis. AI alone, and this was not a very good AI, not tuned for the purpose, was 88% accurate. So much smaller error rate. And if you're the patient and there's a 27% chance, 1 in 4 chance you got the wrong diagnosis in the complex diagnosis, that's pretty damn bad. But what's even worse, when they had the doctors use the AI, which was performing at 88%, the doctors improved their performance from 73 to 76%, but degraded the AI's performance from 88 to 76 because they tried to use human intuition and human judgment. That pattern is repeating all over the place. Doesn't matter where you look.
Definitely, like these kind of incentives is something back to the regulation and how they define these incentives and everything. I would like to focus on
Hopefully that's one thing the Trump administration can do right, make it simpler to practice with AI. Because today the AMA, and on a state-by-state basis, controls who can give medical advice, and frankly an app should. Any doctors in here?
So, we'd like to also focus on the VC industry. AI is forming majority of the investment in this industry as we speak, and AI has its own dynamics. For example, faster growth, less need for capital, especially in the application space, and faster to liquidity, less humans required in these startups. Like we see that in Bay Area now, we have what Sam Altman says, $1 billion startup coming soon. How do you think, as an investment vehicle that is the majority of the investment in this space, is changing venture capital?
I don't think it's changing it today. I think the amount of money, one, it hasn't gone down, it's gone up. So if you look at the average size of investments, it's gone up, because when money is freely available, smart entrepreneurs use more of it. And so there are clearly examples of very small companies growing very rapidly on small amounts of capital. So almost anybody doing software engineering, replacing a software engineer, doing very, very well. And not needing a lot of capital and growing. Some of the fastest growing companies, the odd thing is every company in that sector is growing exponentially with 10, 15, 25 people. It blows my mind even today. We have a couple of those investments, and it's just amazing how fast they're growing. But the number of opportunities is so large that I don't think the need for capital has declined, total capital has declined. I mean, in continuing with the theme of we are replacing almost all experts in every area, if I just look in our portfolio, we're building an AI primary care doctor, AI mental health therapist, AI physical therapist, AI cardiologist, AI oncologist. We're building AI structural engineers. We're building AI salespeople, AI marketing people, AI accountants. Like, I could count 30 of these that just in our portfolio we're trying to do. And I don't think there's more than 300 professions to do. And each of these is an interesting, very large opportunity. So I'm pretty bullish about the opportunity set, and the number is very large. So almost every place that employs a lot of people doing the same thing will be replaced. And this is, I'm talking about software expertise. So when you're talking about an accountant, their expertise will be replaced by a software AI, building an accountant. And very soon they'll be certified as CPAs. Today they're going through CPAs. But that's happening. And then when you add robotics to it, and physical labor gets eliminated, you're seeing such large opportunities.
So you mentioned there's not much change to VC in light of AI, but out there is less capital being allocated to VCs as the asset class by the LPs because of the macroeconomics and the interest rates primarily. And that capital allocated is getting more consolidated into the hands of the top players in the VC space. How do you think this is shaping, why it's shaping, and how do you think it determines the future of VC?
I think I don't worry about those things. I don't track those metrics. They're largely irrelevant. Academics worry about stuff like that, and people who aren't actually building things of value worry about things like that. Asset allocation is a funny game. Whenever a category has high returns, the next 5 years we'll see large allocations, and then what happens? The returns go down because the opportunity set hasn't changed and everything's overfunded. The next 5 years after that, allocations will go down and the returns will go up. I don't worry about those machinations, and people follow the recent trend and have a strong recency bias, as a psychologist would say. I think they're largely irrelevant to the longer picture. The longer picture is built on fundamentals. Like, what value are you creating for society? Now, there's lots of tactical things you can do. Get in when things are low, get out when they're hot, and so you can time things. But I don't think that's a durable way for all of you to participate or do things. I think it's very hard to predict, and people who do well there have a high degree of luck, and maybe some opportunism, which is fine. I think the more valuable thing is what can you create that's a huge contributor to society. If every person on the planet can get a free primary care doctor, that's real value. Or an oncologist. If you grew up in India like I did, most people who get cancer will never see an oncologist, not even get close to one. Now that's a contribution that's worth making.
So a lot of the people here, they're looking to start or join a VC, and they're looking about smaller VCs versus larger one, maybe starting their own. What do you think determines a good VC person in this age, now the age of AI and innovation that we are facing?
So my view is very simple. To make a good VC, you have to have lived entrepreneurial experience. Otherwise, you have no empathy for entrepreneurs. We don't even allow people to calculate an IRR in our shop. Think about it. We are an investment firm that doesn't ever look at IRRs. Why? Because you can, IRRs relate to some sort of temporal notion of when you get in and get out. It doesn't relate to what you've created over the long term. If you build a stripe over the long term, timing doesn't matter. If you build a square over the long term, timing doesn't matter. You're building something over time. So, but to your question of being a VC, I think having entrepreneurial experience, seeing how hard it is to be an entrepreneur, gives you real empathy for entrepreneurs. Otherwise, you get an MBA, join a VC firm, go on a board, you're not qualified to advise an entrepreneur. You're basically not qualified, and I think that's the wrong approach to be a VC.
You mentioned you don't use the standard IRR models. How do you choose?
We don't use any IRR.
So then how do you evaluate startups? How do you choose which startups you want to invest in, and how do you put a number on them in the valuation?
Most spreadsheets I see, I'll use an impolite term, is mental masturbation. It's just not really that relevant when any number can vary by plus or minus 1,000%. How do you calculate an IRR? You're fooling yourself. So you have to say, what's the fundamental advantage? Is there a product market fit? Am I better than my competition? Do I bring more value to the consumer or the buyer? Those are the fundamentals of building a business, not timing or IRR. I just find they're almost never relevant. And if you look at the most successful companies, you mentioned some, DoorDash or Square or Stripe or OpenAI. OpenAI, most investors, we committed to invest in 2018. There was no hot AI. There was nobody working on transformer models. They weren't called LLMs. And people who were investing focused on, it's a nonprofit, there's no product plan, there's no revenue plan, there's no, all the stuff that is largely irrelevant to the fact that if you create an AI, you're creating multiple trillions of value, and you will learn to participate if you create a unique technology that does something, and that's what happened.
And how did you put a number in your time of investment on OpenAI?
Didn't. I was pretty clear, didn't know whether a breakthrough would happen in 3 years or 10. But it didn't matter. If the number is large enough, it doesn't matter. And OpenAI isn't the first time that's happening. The largest returns come from creating something of real value, and then timing matters much less. Yeah, to Wall Street investment firms matters, but I've never enjoyed investing as a business or looking at spreadsheets.
So a question for you, Vinod. You obviously have...
How many engineers here versus... Yeah. Engineers focus on what's valuable that you can create with new technology. And of course, there's business model innovations to be had. DoorDash wasn't a lot of technology, it was a lot of innovation without technology, but in the end, focusing on value creation is what matters.
So you mentioned about these successes and a pattern in those successes. I'm sure there's a lot of failures in the VC business naturally and for Khosla Ventures as well. Is there a pattern for failure that you have recognized over the years? Like what makes the startups fail?
No, there's lots of ways you can fail, but failures don't matter because you only lose 1 time your money. Right? When you can make 10 times or 100 times your money, the 1 time your money you lose doesn't matter. And that's very counterintuitive to investors. It's very intuitive to people who are building companies, and venture capitalists, generally the good ones, focus on that. And that's why I think doing RR calculations is a bad habit when you're trying to do early stage investing. If you're doing late stage, yes, it could make a difference, but you're then looking at spreadsheets, and it's mostly boring.
And what's your view on your portfolio company, OpenAI? Naturally, they started very well and they disrupted the industry. Now they are facing fierce competition, they are becoming a commodity, the margins are going down. What do you see as the future of this portfolio company?
That's all. So let's separate reality from perception. If you're a reporter, any reporters here? All you want to do is write clickbait headlines. That's entire purpose is to take whatever story is being told, tell an opposite story so somebody will click on it. It doesn't matter. While people have been talking about generalized models and all that, what's happened to the valuation of OpenAI that real investors have been willing to pay? What's happened to, even more importantly, the revenue trajectory? Growth, most companies can't grow that much in 30 years, let alone in 3. Right? It was 0 revenue in December of 22, so from January of 23 to 2 years, really, it's grown through the roof, more than most companies grow in 30 years. That's what matters. Why is that? Because it's adding value.
And do you think the competition they are facing now, how do they come out of this competition?
They don't have to. The market is so humongous. You know, if you're going to be a large part of GDP, it doesn't matter. If a company does $100 billion of revenue, which is reasonable for some of these companies in the next couple of years, and more than one company can do that. It's worth trillions. So who cares about the competition? There's plenty for everybody.
Mm-hmm.
You just have to do really great products that win in certain segments or all segments, hopefully.
So OpenAI has really changed the VC landscape in the last 2-3 years. There are people out there who think that OpenAI actually saved venture capital because there was a degree of innovation with immediate returns that people. How would you see the counterfactual that the breakthrough has not come through for VC and how it will go out?
Well, it has if you're in the right place. Look, people take a narrative of an average. If you're investing in a lot of crappy stuff that wasn't bold or consequential, you're not going to have an OpenAI. If you invest in OpenAI or one of the top 10, 15, 20 investments in AI, you're doing great. But since there's 3,000 VCs, most of them haven't. And most of them came too late, and they did the herd instinct, so they invested later at much higher prices. That almost certainly will have down rounds. But who cares? If you take perspective of what happens by 2030 or 2035, then you don't care about the ups and downs. You know, it's odd to me, people care about every down round in private companies, but stock market goes up and down every single day, every single week, a month. Look at the difference between January and today. But that doesn't make headlines, and so reporters don't write about it. The reporters are in the business of reporting something that's counterintuitive that'll get people to click. That's not the reality of life. The reality of life is what you're building.
So a lot of people in this room think about becoming entrepreneur and startups. What do you think defines a good entrepreneur at this stage on AI? And particularly, how should they define their moat in this competition?
Well, each one depends on what you're doing and what area you're in.
Mostly on the application layer of AI.
There's so many opportunities. You know, being first helps. Being the fastest to learn is probably the single most important characteristic of an entrepreneur. Yeah, when a batch guy joins YC, and I'm looking at companies in a batch, how do I evaluate it? Anybody guess what's the single biggest variable in determining whether something's worth funding? It's
The founder, I guess?
the
The founder, no? The founder, the founding
The
team?
founder, yes, but what about the founder?
Founder's background,
The team composition.
No? It's how much they've learned in the 3 months they were at YC. The rate of change of learning is what makes a great founder. people who are always examining their assumptions, testing new ideas, and iterating. So I always ask the partner at YC, how much have they learned in the 3 months they were there? It's the best indicator of what will happen in 3 years or 10 years. These are not intuitive and don't make sense. If somebody's been 20 years in the auto business and they're at YC and they're behaving like they're 20 years in the auto business, they're not going to be a good founder. They may have a lot of expertise. Let me postulate the following. I've been doing venture capital for the last 40 years or so. I can't think of a single example, and there's biotech is a specialty area, so we can talk about that separately. But I can't think of a single example of somebody who knew the area or was an expert in that area able to innovate in that area. Could you imagine somebody at Hilton being able to do Airbnb? Somebody at Avis able to do Uber? Somebody at Airbus or Lockheed being able to do SpaceX or Rocket Lab? Or I can think of one example in 40 years of a large change. Intel can do one 7 nanometer process to 5 nanometer. That's incremental, it's obvious. But can they do an NVIDIA? No, they can't. So there is no example of somebody who knows the space doing really, really well in creating a large company. What it takes is a rapidly learning founder who's thinking from first principles and thinking more radically, and experience in this environment is a bias, and it's mostly a negative bias because you know how things are done, so you don't think radically enough to do things completely differently. It's hard to be running Hilton and say people will let somebody in their house and rent their room. It's just hard to imagine that. Today it's obvious, it wasn't obvious. What nobody figured out is, in the Airbnb example, that there's a small percentage of people who have stressed mortgages and their only choice is lose their house or let a stranger live in that spare bedroom. That's a very different business proposition than what it sounds to most people. People randomly let strangers into their house to make $100. So I do think innovation comes from people operating outside their area of expertise and fundamentally taking innovative and rapidly learning approaches.
Just one question though. A lot of people who actually left OpenAI did get the funding from VCs, so is that an exception?
Well, I think that area is so new. Nobody has a lot of biases from experience. It's a 2-year-old field. Literally, ChatGPT was released in December of 22. Until then, nobody was focusing on this, and there wasn't. So, in rapidly evolving environments, when people have to think from scratch, smart people can do well. When they rely on 20 years of experience at something, they generally do very poorly in startup environments. That's good in avoiding mistakes. It's not good in discovering new innovative paths. So a good founder will hire one of those people and leverage them to avoid the mistakes you might make otherwise, but they will never drive the core innovations in a startup.
I'd like to ask a couple more questions and open it for Q&A from the audience.
Yeah, I do apologize. I have to leave at 7, so we should open it to Q&A as quickly as possible.
Perfect. One last question is, you have invested in companies who are using AI for changing investment. What is your thesis there, and does Khosla Venture use those kind of solutions?
So we don't use those solutions. Private equity firms do something quite different, and Wall Street does something quite different. It's a pretty rigorous process that they follow. That's why they don't really innovate. So hiring a fresh MBA to grind till midnight every night, doing some analysis, that's what Goldman Sachs does. Those four things AI can do, and entrepreneurs are going to do it. My bet is 5 years from now, there won't be a thing called an investment professional. It'll be an AI that's the best investment professional. Today, the model is these AIs are helping humans do their job of investing or analyzing or coming up with a strategic plan. That applies to consultants. I had to speak at lunch to a BCG senior team meeting. But I think by and large, AI will not help humans do a job. By 2030, AI will be doing the whole job. Don't need a human in the middle to degrade the AI's performance.
Perfect. So looking forward to that. Let's open the floor to the questions.
So you mentioned experiences can be against people building new things. Expertise is also getting democratized. Do you then see better founders coming from, let's say, school rather than universities? Like the younger they are, the faster they can learn.
I think entrepreneurship is a cultural thing. It's not from a location. So certain locations encourage that culture more. So if you're in Frankfurt, Germany, and you try and think of a startup, people will discourage you from taking the risk. In Silicon Valley, you'll be encouraged. If you want to hire 3 people, anybody will leave any large company to join an exciting startup. That doesn't happen in most parts. So the reinforcing is happening more in a place like Silicon Valley, but I think Silicon Valley is is a culture, not a place.
But would you also think that the age demographic changes of the startup founders, they will be comparatively significant?
You know, it's funny, a lot of founders are young, but there's founders of all ages. I find the best founders are founders who have some experience, but are operating in an area not of where they have the experience.
Okay, let's take on the
Quick question, if expertise and intelligence are, because of AI, very common to everybody, how can insights be generated which are distinguished, which are differentiated, and based off of that, we create value?
An AI can do that. I mean, look, let me give you a very specific example. How many people know the example of row 37 in Go? Does that? A few hands. Right? Humans have been playing Go for long centuries, if not thousands of years. Across all human experience, nobody had ever come up with a move called the row 37 move is called in Go now, because nobody had ever used it as a strategy. When Lee Sedol, the world champion in Go, was playing DeepMind's AlphaGo, AlphaGo made this move and all the experts declared it a stupid move. Turns out it was the winning move. It was a very creative move, anticipating a few moves ahead. And now it's standard recognized as, yeah, it had creativity that no human had come up with across centuries.
So perhaps human traits of being persistent and being good with communicating the story, people skills would matter.
Okay, so how many people here have used deep research? A show of hands? Good number. Look, it's my go-to thing now, no matter what I'm trying to do. My chief of staff is a PhD in immunology. We're looking at an application of a technology to differentiate stem cells. She spent a week analyzing, produced an 18-page report and said, here's 2 applications to use it in. I then just entered it into deep research and came up with the same 2 applications. And she just like, I just wasted all this time writing up 18 pages. And that's going to be a very common experience. How many consultants in the room? A few.
That hurts.
I'll give you a real example. I was talking to the CFO of OpenAI. She was talking to a CEO of a big retailer who was looking at strategy additions of what to add to their product lines. Had a strategy team doing all that work. While she was on the phone, she entered the problem into deep research, and before they were off the phone, she shipped him a report that he judged to be better than the strategy team had come up with. So, this is the beginning. And AI is still pretty clumsy, and it's not tuned to each of these purposes. So, a year or two or three, it's going to be so radically different. I don't think humans stand a chance in competence.
Let's get one question from the LPs in the room.
So with that in mind, let's say 10 years from now, when AI can self-educate, will startups be something that are feasible, or which is all done by AI?
That's an interesting question. I do think very soon we will see a 10-person startup that has $1 billion in revenue. So it's really more some abstract choice of areas and strategy, but the AIs are doing all the work. Whether it's selling, it's marketing, it's accounting, it's research. AI scientists will be the big thing the next 2 or 3 years. I think you can multiply the number of scientists in the world by 1,000-fold quite easily. You couldn't graduate that many PhDs out of all the university systems. So it's a hard question to answer. How many people have read a document called Situational Awareness? Okay, so you have. It's an important document for everybody here to read. It's a little bit of a technical document, but you can mostly ignore the technical details. But the document posits that almost all the business stuff going on, including the use of AI in business, is rearranging deck chairs on the Titanic. And let me give you how many people in healthcare? Quite a few hands. I spent a lot of time talking about AI in healthcare, and so I get to speak to a lot of boards of healthcare companies, large healthcare companies. And all of them tell me proudly that they're using AI to prior authorize a procedure or insurance pay or debate whether a charge is valid or things like that. Or they'll transcribe what the doctor is saying to enter it into an electronic health record. And I say, if what I believe is true, which is you can cut the cost of providing care, and let's not talk about hospitals, but what physicians and care plans like CVS and United Health and these big behemoths do. To cut the cost of patient care by way more than 50%, would you be optimizing the things you're optimizing? Or would you be saying what's the best damn health plan to put together if that assumption is true? The answer is obvious. If you can get that large a competitive advantage in a business with 2 or 3% cost of care differences between the best and the worst, if you've got 50, 70% differences, you've designed a different strategy, and that's what I mean by rearranging deck chairs on the Titanic by local optimizations when there's a larger opportunity. Now, if you're lucky and nobody in your industry does the radical thing, you'll be fine. But we saw an example of this recently. Everybody was rearranging deck chairs on the Titanic in the auto industry when it came to this issue of electric cars. Nobody's doing a thing. And then Elon Musk comes along and changes the rules of the game. Suddenly, every single company has completely changed their 5-year plan to respond to something that would largely be irrelevant. Even the forward-looking companies like the Third are doing a Prius, like a hybrid. Like these incremental steps, and then Elon did something. He had no experience in the auto business. He almost went bankrupt 2 or 3 times. But he was committed to his vision of doing something differently.
We know that I know you had a hard stop at 7. I would like to appreciate for the time you spent with us. The future of Utopia with the AI is beautiful, and thanks for contributing to that. And with that, let's close the session. We'll have a networking event after that.
Yeah. So thank you, everybody. I am going to run, so if you talk to me, I won't remember anything anyway. So feel free to email me at vk@khoslaventures.com, and that's probably the best way to reach me. Thank you, everybody.